All right. Good morning, everybody. Good morning, everybody. Happy Wednesday. Happy Fed Day. Today is January 31st, 2024, and there is so much happening in the world today. I don't know how we're going to fit it into this show, but we're going to try. Where do I start? Everybody's probably talking about AI Mania not living up to the hype this morning. We had big earnings yesterday from the mega cap tech companies. They were all good earnings, but the market was priced for stratospheric perfection. We sure as heck didn't get that. So good earnings, not good enough for stocks at these valuations. So all the big cap names are selling off today, but that is not the biggest story. The biggest story, and it snuck up on us this morning, nobody was looking out for this. New York Community Bank, ticker NYCB. They are imploding right now. Their stock is down over 30% the last time I looked. Now, New York Community Bank, you may recall, they're the bank that bought the remains of Signature Bank, or at least the biggest chunk of the remains of Signature Bank last year after they failed. New York Community Bank is also the biggest owner of rent-stabilized apartments in New York City. But I think what's going on here is this may be the first bank to take a big hit from commercial real estate. They're mentioning in their earnings release that there was 2 loans in particular that cost them a lot of money. They set aside a big chunk of change, over $500 million for loan loss provisions. They are cutting their dividend. And I'm pretty sure, I don't know this for sure because this news is just hitting the tape this morning, but I am pretty sure when the dust settles from this, it will be commercial real estate that caused this problem. Guys, it's got to show up somewhere. Every freaking day, there is another story about another building in some city that is selling for 30%, 40% of what it sold for 10 years ago, and that the banks and the CMBSs and retirement plans are taking the hit. It's got to show up somewhere. So much money is going up in smoke in commercial real estate right now, and yet asset prices and markets are just humming along like it's not happening. It just doesn't work that way. Sooner or later, you got to balance the books. New York Community Bank is taking a big hit this morning. That bank, $111 billion in assets, so it's about half the size of First Republic. That's the size of the bank after they bought Signature Bank. And another thing that's hurting New York Community Bank is because they're now over $100 billion in assets. Now they are technically a bigger bank, and they have all kinds of additional regulatory requirements that they're subject to, additional reserves and things like that. So there's some growing pains going on there. But ultimately, I think it is commercial real estate that's causing that problem. That's a big one. I don't know if the mainstream press is covering it yet, but by the end of the day, I think they will. And I guarantee you the Federal Reserve is seeing this, and Jerome Powell is sitting there wondering what kind of language he's going to change in his press conference today, because the Federal Reserve is sooner or later going to have to address what's happening in commercial real estate. If you look at stocks, if you look at bonds, if you look at the other banks, everything is going okay right now in the market, even though there's obviously plenty of underlying weaknesses. We talk about a lot of them on this channel. But the only real reason to expedite the interest rate cuts at this point is commercial real estate. And I think it's already too late to do that, to be honest with you, because I don't think 25 basis point rate cuts is going to save a building that went for $100 million in 2011 and is now selling for $22 million. 25 basis points ain't going to solve a problem that big. So I think it's already too late. But ultimately, if you're looking at the market, if you're looking at the jobs and you're looking at GDP and everything else and saying, why would the Fed cut? Commercial real estate is the answer. And I think that's why New York Community Bank is hurting this morning. Now, elsewhere this morning, the AI hype, the results are just not living up to the hype. We got earnings yesterday from Microsoft, Alphabet, Google, and AMD. Every single one of them were good earnings. They're all beats. I mean, they're all showing good growth, but these stocks are all up 70 to 100% in the last year. And when your stock is up that much, when you're trading at that kind of a multiple, you need better than good. You need better than awesome in order to sustain those numbers. Pay attention, NVIDIA. I know you and the NVIDIA bros are out there. I get emails from you guys every day. Are you guys paying attention here? Microsoft's results were really, really good. A lot of top-line growth, especially in cloud. But again, they were not perfect. And Microsoft probably the best of the results. Google's results, good. Beats on the top line there, but ad revenue came up a little short. Google stock is selling off from that. And AMD, That was interesting because AMD showing some impressive growth, but they're projecting flat results for data center in their next quarter. Now, keep in mind, data center, guys, that's where those GPUs, that's where all the big AI chip sales is. And AMD is supposed to be the closest thing to competition that NVIDIA has. And AMD is saying no growth in data center next quarter. It's almost like when you don't stuff your channel with your own money round tripping right back to you, that there's actually not all that much growth there. Or at least the growth that is there, it's only good. It's not stratospheric. Again, pay attention, NVIDIA bros, to what's going on over at AMD. Also going on this morning, we got results from Boeing. Boeing's results were good, but that's being overshadowed by the issue they're having with the 737 MAX 9 and the panel that blew out, the slew of safety issues Boeing has had. They withdrew their guidance for the year, saying basically, we don't know how much money we're going to have to spend to solve these problems, so we're not even going to try to estimate our earnings. But the market is actually liking Boeing's earnings. Their margins were looking pretty good. So that stock is up a little bit this morning. We got reports from MasterCard that came in pretty good, but much like Visa, showing slowing growth in those payments volumes. So MasterCard stock down just a little bit the last time I looked. Again, pretty good results, but a little bit of worry about slowing growth there. At some point, people are going to have to stop racking up new debt. I mean, I'm assuming I'm operating within the physical world where we're bound by the laws of physics. At some point, you're not allowed to take out any more debt, right? Isn't that what banks usually do? At some point, banks say, "Oh, you make X, you owe 10X, you can't borrow Y anymore." And I'm pretty sure sooner or later that happens. MasterCard, Visa, all these buy now, pay later facilities out there, sooner or later, the debt train is going to grind to a halt. And another big thing happening this morning, this story hit the tape last night. Hundreds of rural banks in China are all being force merged by the Chinese government. And I'm sure it's all good news driving a move like that, right? When the government steps in and says hundreds of little banks must all turn into regional behemoths under penalty of law, that's a good sign for your economy, right? That means everything is going so well for you when the government has to step in and do that by force. This comes just a few days after Evergrand was ordered into liquidation. We still don't know if the Chinese government in the mainland is going to enforce the ruling from Hong Kong court. And so what actually happens to those offshore bondholders from Evergrande, it remains up in the air there. But guys, when the CCP goes to hundreds, and it is hundreds of small rural banks and says, y'all need to form one big bank, you think maybe that's an important story? You think maybe there might be something going on there? Because, well, it's really hard to bail out hundreds of banks, but it's real easy to bail out one, isn't it? Or maybe 4 or 5. And keep in mind, these are the same small rural banks in China that about a year and a half ago were having mortgage protests. Remember the plainclothes police officers that were showing up and beating up the protesters and dragging them away? My channel got in trouble because I showed video of cops beating up protesters at the bank for the high crime of just wanting their savings back. And, well, can't be critical of China. Certainly can't show Chinese thugs beating up people who just want their money back. I got a little algo slap on the wrist for covering that one. But looks like China is trying to get out in front of something like that again. So much happening in the world this morning, guys. I really don't know where to start, but I'm going to go ahead and start with shrinking my big melon of a head. Don't forget that like button while we're doing that, guys. And if you're new to the channel, hit that subscribe button and right next to it, that notification bell, and have your coffee with the melon heads every morning because we do this every day. The S&P right now is down about 25 points or about 0.5% lower. We've got the Dow is actually positive right now, up by about 48 points or 0.11% lower. I was looking at Dow components. It looks like JP Morgan and Goldman Sachs are making the biggest moves up in the Dow right now. So that's what's going on there. I guess big banks are they trouble at some little community bank in New York. Big bank stocks are going up. I guess they're licking their chops at the prospect of getting even bigger on the taxpayer's dime. The Nasdaq, meanwhile, is down 182 points, 1.05% lower for the Nasdaq this morning. That is being driven 100% by a sell-off in AI Mania. Again, at the end of the day, guys, it's about making money, right? The whole point is to make money. And if AI doesn't make you money, then, well, AI was all hype then. I'm not saying AI is all hype. I'm saying the enthusiasm is mostly hype. At the end of the day, AI is going to be a very useful productivity enhancing tool It may displace jobs. It may create other jobs, but we're treating it like AI has already driven millions of people into unemployment, and we've already had to roll out universal basic income, and that androids are washing our dishes and the robot uprising is next week. Come on, guys. It doesn't happen that fast. Somebody's got to say, hey, maybe we should slow down here. Meanwhile, the DXY, the US dollar, is down 11 basis points this morning, 103.28, slightly weaker dollar here. The government bonds, we are looking at the 30-year Treasury is down about 2.5 basis points, yielding 4.252. The 10-year is down almost 5 points this morning, 4.009. Guys, the 10-year's taken quite a fall in the last couple of days here, falling pretty rapidly. We were pushing 4.2 a couple of days ago. Now we're at 4.00 here, so keep an eye on that 10-year. A break below that 4 threshold would be a big psychological move. The 2-year at 4.285, that's down 7.5 basis points. Big move lower on the 2-year. So we're starting to see that gap between the 10 and 2 close here. It is currently at just 28 basis points. And the 1 month is at 5.371. That's down about half a point. Looking over at commodities, we've got April gold futures trading at 2,061. That's up $10 this morning, about 0.5% higher. Gold's looking pretty good here. Silver's still struggling along, but looking all right this morning. 23.30 for March silver futures. That's up 7.5 cents, or about 1/3 of 1% this morning. Platinum is up about 0.3%. Palladium is down a fraction of 1%. Crude oil WTI March futures are trading at 77.35. That's down 47 cents this morning, about 0.6% lower. All right, let's get into the meat and potatoes of this stream here, guys. This is a big one. I don't know if it's by the end of the day. I think people are going to be talking about this. I wonder, will they be talking about this in the FOMC press conference today? New York Community Bank Corp stock falls after swinging to a loss and cutting their dividend. Just this morning at 7:46 a.m., shares of NYCB fell after the parent of Flagstar Bank swung to a fourth quarter loss and slashed its dividend to shore up capital in the aftermath of its purchase of assets of the collapsed Signature Bank. Chief Executive Thomas Kangemi said the bank holding company is adjusting to the demands of being a large bank after its purchase of assets and liabilities from Signature. With the deal, the company's assets under management surpassed $100 billion, subjecting us to enhanced prudential standards, including risk-based and leverage capital requirements and liquidity standards and more, he said. We took decisive action to build capital, reinforce our balance sheet, strengthen our risk management process, and better align ourselves with the relevant bank peers. It's a lot of corporate gobbledygook there. Those steps include cutting the company's quarterly dividend to 5 cents a share. That's down from 17 cents a share. But this paragraph right here, this is the problem. For the fourth quarter, the company recorded a $552 million provision for loan losses. That's up from $62 million in the third quarter. Guys, that is a huge build out in provisions for loan losses, from $62 million to $552 million. These guys lost almost $500 million somewhere. The increase reflects a jump in charge-offs that was driven by just 2 loans. So 2 loans drove an increase in loan loss provisions of almost $500 million. And it's not hard to figure out, where can you get loans that big that are failing right now? And it is clearly commercial real estate. All these stories I do about these office towers and these ridiculous values that they're selling, and how at the end of the day, it's all either at a small bank or somewhere in somebody's pension or retirement account is where this stuff is hiding. It's got to show up in the bank sooner or later, and it looks like that is starting here this morning. The company said the increase also reflects the weaknesses in the office sector and other corners of real estate. So it is commercial real estate that is crushing New York Community Bank right now, along with the regulatory requirements of their sudden surge in growth when they bought out Signature Bank. Check out their stock. Oh boy, this bank is toast, guys. Absolutely toast. Down 39.98. This stock is down 40% and still falling this morning ahead of the opening bell. Shares are going to be halted in this one at some point today. This may be an FDIC receivership by the end of the day. I don't know how fast this is going to happen here. Look, guys, the crisis that we got last March was not the black swan event that most of the doomers will say, myself included, were calling for. The bank crisis we got last March was unexpected. The losses from U.S. Treasuries really what most people were worried about, heading into last year was losses from companies that were no longer profitable and higher interest rates, losses from commercial real estate, people not paying their mortgages because they lost their jobs. So the bank crisis in March was a totally different phenomenon. It came and it went. Some of the losses from U.S. Treasuries still remain, even though interest rates have fallen a little bit since then. But this is the one a lot of people were expecting. This is the one I have been expecting. Losses from these office buildings piling up, and New York Community Bank stock is now down 40% this morning. This one, I don't know. Is this going to be enough to kick off another banking crisis, or is this going to be an isolated incident? I'm sure any minute now, we're all going to be reminded that our banks are strong and resilient and well capitalized, and I can't wait until I'm done with this job and I can start collecting my speaking fees for all the bribes that I took under the table. And yes, thank you, Secretary Yellen, for that reminder of just how strong and resilient our banking system truly is. Now let's talk about what's going on elsewhere in the market. I told you guys there's a lot happening today. Nasdaq Futures sink as AI results don't match the hype. And that was the headline on Bloomberg this morning. And that one pretty much sums up what's going on in the Nasdaq right now. AI results don't match the hype. It's if only some YouTuber with roughly 51,000 subscribers had warned people that AI, though has a lot of potential, is not going to live up to the hype, that if these companies don't start making buku bucks off of AI, that these stocks are going to tank because they're priced for absolute perfection. If only somebody had tried to warn people. But alas, the results do not live up to the hype. Microsoft earnings jump as AI demand boosts cloud unit. Now, Microsoft had the best of the earnings yesterday. And again, even those weren't good enough. But Microsoft actually did pretty well. The company touts potential that its new AI assistant will power a new era of growth. Microsoft recorded its highest profit growth in more than 2 years as excitement about AI helped power the growing demand for its cloud services. Microsoft's net income rose 33% to $21.9 billion in the 3 months through December. That is the strongest quarterly expansion for the company since the quarter ended September 21st. And I would add the quarter ended September 21st. That was back when the Fed was still pumping liquidity into the market. Easy money train was everywhere. So this was a pretty good quarter for Microsoft. I want to emphasize really good numbers here. But again, the stock was so overpriced, it didn't matter. The company has been on a run since last year. It has been at the vanguard of current investor enthusiasm that new AI-driven products will transform the industry, helping Microsoft to dethrone Apple as the company with the highest market value in the world. It climbed above $3 trillion in market cap last week, becoming only the second company after Apple to reach the mark. Microsoft stock right now actually only down about 0.5%, trading at 406.73, down $1.86. So Microsoft is doing the best out of the big mega cap tech companies that reported yesterday. Now let's look at Alphabet, Google parent company. Alphabet stock slips after missing expectations on Google ad revenue. That's a big one there. Google parent company Alphabet reported its fourth quarter earnings after the bell on Tuesday, missing analysts' expectations on ad revenue, the heart of the tech giant's business. The stock slid over 5% lower in pre-market trading Wednesday, part of a broad decline for the tech-heavy Nasdaq. Revenue excluding traffic acquisition costs for the third quarter was $72 billion versus nearly $71 billion expected. That's higher than the $63.12 billion that the company generated in the same period in the prior year. So their total revenue grew, and it was higher than the market was expecting. But there is a but there. But investors seem to focus on the advertising miss. The company reported continued growth in its cloud business, which has grown in importance to investors because of its usefulness in the development of AI. Google Cloud revenue beat expectations, crossing the $9 billion mark, amounting to a 26% jump from a year ago. The company has been pushing to claim additional market share in the cloud computing market, where it currently sits in third place behind competitors Amazon and Microsoft. So Google is showing growth. Their AI is growing. Their cloud is growing. But that ad revenue miss, that was a big deal for Google. Their stock is down 5.66% ahead of the opening bell, trading at 144.45. Now, here's another one. This company not nearly as big as Alphabet or Microsoft, but this is a big one because, hey, NVIDIA, guys, AMD is the closest proximity to NVIDIA that you can get. They're the closest thing to a competitor. Well, AMD's AI revenue forecast gets a massive boost. It's a little misleading, but apparently not enough as the stock falls. Advanced Micro Devices on Tuesday dramatically upped the annual revenue forecast for its AI chips, but after a big recent rally in the stock, Wall Street seemed to be looking for more. AMD now models upward of $3.5 billion in 2024 revenue from the data center graphics processing units, or GPUs, which focus on AI applications. That's well above the company's prior forecast, which was for more than $2 billion. But a Susquehanna analyst wrote recently that investors appeared to be targeting $6 billion or more. And guys, this just goes to show you the ridiculous expectations for AI. All right, AMD is growing at an amazing clip. They're doing fantastic. They were projecting $2 billion in sales for AI applications and for these chips, these GPUs, that as of yet still don't have a lot of mass market applications. It's really speculative. They were forecasting $2 billion. They just raised that forecast to 3.5, but the market is saying we wanted 6. We wanted triple what you were forecasting. So the market just got way, way ahead of itself here. Shares of AMD fell 6.5% in Tuesday after hours trading following the outlook. Through Tuesday's close, the stock had enjoyed a sharp rally of about 80% since the company's prior earnings report. An HSBC analyst wrote ahead of the earnings that the stock surge raised expectations significantly, notably for revenue potential of the MI300 AI accelerator family. That's AMD's big flagship product. The company also came up shy with its overall forecast for the current quarter, a dynamic, somewhat expected, seeing as rival Intel whiffed with its outlook last week. And there's another important thing here that I want to mention. This one right here, AMD is calling for sequential revenue declines in its client embedded and gaming business. So its non-AI business is going down. And they're noting that the semi-custom revenue could fall by a significant double-digit percentage. And where's the other one here? There's another big quote. Where is it? Data center. I got to find it, guys. I can only highlight so many paragraphs at a time. Here we go. AMD forecasts first quarter revenue of $5.4 billion. That's at the midpoint of what the market was expecting. The company expects flat data center revenue on a sequential basis, with the seasonal decline in server sales offset by a strong data center GPU ramp, according to the company's release. So they're saying here the company expects flat data center revenue on a sequential basis. They're saying no growth in data center for this quarter. This is where you have to say to yourself, it's almost like if you don't give money to companies so they can just hand it back to you to buy your product, then there's no growth. That's what AMD is saying. Pay attention, NVIDIA, guys. Flat data center revenue on a sequential basis. And look, guys, big, massive AI data server farms, they don't buy their GPUs as Christmas presents. It's not like there's seasonal demand at play here. We're talking about sequential basis, quarter over quarter, flat data center revenue. It's not growing. So it's growing at NVIDIA, but that growth is being driven by NVIDIA's own money being given to companies NVIDIA is investing in, so they can take that money and turn around and buy the chips right back from NVIDIA. There's a word for that. It's called round tripping. Some might even call it channel stuffing, all ways that you can inflate your growth. So AMD right now is down 4.2% ahead of the opening bell, trading at 164.85. Bad results for big tech last night, guys. Now who do we have today? We've got, we already got MasterCard and Boeing. Tomorrow we've got Apple and Amazon. Okay, that's going to be big, especially Amazon. Amazon is making big investments in AI, so we'll see what we get from them tomorrow. But Apple and Amazon is going to be the last chance this week to derail the AI hype train that is just grinding to a halt right now. I don't know. That metaphor didn't really work so well. Maybe we're just going to move on here. Boeing pulls guidance to show investors that safety comes first. According to CEO Calhoun, he tells the staff he's focused on improving quality. Fourth quarter profit and cash flow surpass analyst views. Boeing suspended financial guidance for 2024, sending a message to investors that it's focused squarely on addressing a troubling string of quality slips. The plane crashes that killed hundreds of people, that little slip up, that thing. Quality slips that culminated in a near catastrophic panel blowout on a 737 MAX earlier this month. All right, so they're referring, I got a little ahead of myself. They're referring to that panel blowout as a quality slip. I guess you can do that when you don't kill people. when the plane crashes, that's more than a quality slip. But the 737 MAX that had a panel blowout, luckily nobody died in that one. Fourth quarter profit, cash flow, and revenue all surpassed analysts' expectations based on results published Wednesday by the U.S. plane maker. But the earnings report took a backseat to Boeing's latest 737 MAX crisis and its response to the ensuing regulatory clampdown. So they're pulling their guidance. We just don't know how much money this issue is going to cost them, if it's going to result in canceled orders. So they're just pulling their guidance here. But they did report a pretty good quarter. And right now, Boeing is up about 2.37% ahead of the opening bell. My guess is driven largely by those quarterly results, not so much the pulling of the guidance, which I guess the market was expecting. Boeing stock trading at $205 even at the moment. Another one reporting this morning was MasterCard. That stock is up about 1% here. They were down a fraction of a percent a few minutes ago before we started the stream. Won't spend too much time on MasterCard. They score a profit beat, but its stock falls. Again, that was about an hour ago. Its stock was down as spending growth slows. That's the important one right there. Spending growth slows. That's the operative statement here. So I want to focus in on growth. Spending is still going up. All right. So it's not falling. Spending growth slows. Spending is still going up, but because the growth slows, it's going up at a slower rate, but still going up. People are still taking out new debt. And America's consumer credit card bill stands at $1,036 billion. It went up again last week. Americans just keep putting it on the plastic. Guys, that's going to end really well, right? There's no cautionary tales available out there of what happens when you run up your credit card bills too high. If only people were forewarned that that's an unhealthy financial habit to get into. All right, now let's go across the Pacific to China. This is another story that is flying below the radar right now, and it is a big one. Came out yesterday. China merges hundreds of rural banks as financial risks mount. And first of all, wait a minute, hundreds of banks? How is this not big news? Hundreds of rural banks, not like one bank is having trouble. These two banks are merging. Hundreds of banks are being merged. And then if you look at the byline, it gets even worse. The move affects 2,100 rural banks with $6.7 trillion in assets. Holy shnikes, this is huge what they're doing with China's banks, and nobody is talking about this. And nobody's saying, why does the Chinese Communist Party feel compelled to force the merger of 2,100 small banks, culminating in $6.7 trillion of assets? These banks are buffeted by bad loans, shrinking margin, and slow growth. China is embarking on its biggest consolidation in the banking industry by merging hundreds of rural lenders into regional behemoths amid growing signs of financial stress. After engineering mergers of rural cooperatives and rural commercial banks in at least 7 provinces since 2022, policymakers pinpointed tackling risks at the $6.7 trillion sector as one of its top priorities for this year. That means another wave of consolidation is on the way across the nation. China's banking industry has been weighed down by a litany of troubles over the past years, including a deepening slump in the real estate market and an overall fragile economy. The 2,100 banks in the rural cooperative system saw their bad loan ratio stand at 3.48% at the end of 22, more than twice as high as that for the whole sector. And again, I just got to say, holy shnikes, guys, 2,100 banks are being force merged by the government, $6.7 trillion in assets. This is not some little thing. This is a desperate move by Chinese authorities to contain the spread of the Chinese real estate collapse into their financial system. Now, I would add that so far, China has mostly contained the collapse of their real estate market into their financial system. They did have that banking crisis at the end of 22 when people started the mortgage protest and the protesters got beat up, and my channel got in trouble for shining a light on that. We're not allowed to talk about human rights violations in China's on YouTube. I get it. But this is so big. I can't really emphasize enough. 2,100 banks being force merged. Now, this kind of thing is also happening here in the States. I want to add that. I mean, since the global financial crisis, we have had hundreds and hundreds of small community banks merge and consolidate into these mega behemoths of JPM and everything else that they've turned into now. So something similar did happen in the U.S. It happened slowly over the course of a decade, But the free market did that. It wasn't done at gunpoint by the government. Good God, what is going on in China right now? And checking in on the Chinese stock market, another day of sell-offs. The Hang Seng was down 218 points, or about 1.4% yesterday. And the Shanghai Composite Index was also down 1.5%, 42 points lower. So the sell-off in Chinese stocks continues. We still haven't taken out the lows from last week when U.S. hedge funds stepped up to the plate and bought up Chinese stocks, but it looks like we're getting there. All right, we made it through, guys. I told you there was a lot going on in the world today, man. And if I missed, there's stories about what's going on in Delaware with Elon Musk and a gas pipeline blew up somewhere else. There's just only so much I can fit into the live stream this morning. And thank you very much, Mr. Crab, who says, "Ooh, money, money, I love money, Mr. Krabs. Eat at the Krusty Krab. Oh, yes." Can you elaborate on currency and derivatives on the debt clock at 619 trillion? Ooh. That's big on the debt clock. It's in the money creation section. Thank you, and congratulations on your subscriber growth. Well, thank you very much, Mr. Krabs. I appreciate that, and I love your burgers, sir. Now, I can't comment specifically. I don't track that data point that much. Currency and derivatives, if I had to guess, I would guess that 619 trillion is probably Forex swaps. Anytime you're getting into the numbers in the hundreds of trillions, we're talking about a lot of this off balance sheet, that hidden debt. We'll take your profits from this bond in euros, and I'll give you my profits from this bond in dollars in an exchange. And nominally speaking, you're talking huge principal amounts for the denomination of these bonds, even though it's only actually small dollar amounts trading hands. And these institutions are able to make small arbitrage profits doing this. But if the counterparty risk ever becomes a problem, if one side of that trade ever became an issue, the nominal amount in play there that goes belly up is massive. And so 619 trillion, I haven't studied the nuance of that particular number, but if it's going to be that big, it's got to be Forex swaps is probably most of that money. The IMF did a report on that not too long ago. It was something, I forget the title. It was a really strongly worded title. It was something like massive, risky, and hidden Forex swaps in hundreds of trillions of dollars. And it was talking about this data point. It's been about a year since I read that report, so I can't recall the specifics of it. But that is massive interbank Forex swaps is making that number that big. I don't know that as long as big banks don't start going belly up, that won't be a problem. If we ever get into widespread counterparty risk, that's when we get massively deflationary death spiral events. But I do think we're still probably a pretty long way away from something like that. And my guess is that the central banks will go burr and return, ZIRP and burr, zero interest rate policy and money printing will come back before that number becomes a problem. Now, of course, when ZIRP and burr comes back, that creates another inflation problem, which is another big problem. It's not like it just solves everything. But if that number ever comes into play, if the Forex swaps ever start to go bust because of counterparty risk, we're talking 1929 kind of thing here, guys. So that is probably what they're talking about. Again, take that with a grain of salt because I don't study that data point that closely. But thank you, Mr. Crab, for the super chat, the support of the channel. And I've got Gomers44 saying, have you investigated Evergrand's creditors? We still don't know who they are, Gomers. Sooner or later, we're going to have to, right? The liquidation has been ordered, but you know what? They still haven't been paid back. We still don't know how few pennies on the dollar they're actually going to get back. And when they actually get it back, then they'll report the capital losses and then it'll show up on quarterly reports. We still haven't seen that. So I suspect if there was going to be a contagion from the Evergrande collapse, and there very well could be, I suspect it'll go in this kind of an order. I think first it goes from the developers, then to the Chinese banks, see also the forced mergers of the rural banks. Then it hits emerging markets who are very much intertwined with China through the Belt and Road Initiative. Then it would hit European banks, which I think have more exposure to China than U.S. banks do. And then finally, the contagion would reach the U.S. I'm not saying that will happen, but if the dominoes start to fall, that's probably the order it would go just based on who is most exposed to the Chinese real estate sector. So we still don't have full closure on that one. We're getting there, Gomers, but not quite there yet. And thank you for the super chat, sir. And thank you, Steve Woitis, who says, odd that gold has increased in value in this high interest rate environment. Proof that inflation is over 5% and real rates are still negative with a question mark. You know, Steve, I'm not surprised gold has done well because there's obviously risk is building up in markets, even though the Robinhood bros don't see it yet. Anybody who's paying attention and looking beyond share price can see what's happening. So I'm not surprised that people are buying gold for safety. Also, a lot of demand for gold is coming from China right now because you've got the world's second largest economy who used to put all of their household wealth into real estate. Now they need a new place to put their money, and they don't trust their banks and they don't trust their stock market, so they're buying gold. So you have a lot of demand for gold is springing up overseas. You also have a little bit of a flight to safety going on as interest rates have gone down over the last couple of months. Now, that's been a lot of that has been front-running the Fed's move. But as interest rates go down, gold becomes more attractive. Rates are still high, but they're lower than they were at the end of October, that's for sure. So gold has done well as interest rates have fallen. I like gold. I like silver. I like Bitcoin. I like the shiny stuff, guys, because it is storing my wealth outside the financial system. And as Mr. Crab mentioned in his thing, $619 worth of derivatives, not $19, $619 trillion in derivatives out there. If that ever becomes an issue, then holding someone else's IOU, doesn't matter who they are, is going to be a problem. And that's why it's good to have some of your wealth outside the financial system. Proof that inflation is still over 5%. I don't necessarily think that's true, guys. I actually think inflation is falling a lot faster than they're telling us right now. If you study the nuance of the CPI, yeah, they do that thing with the health insurance to make it look lower, and they're always doing these hedonic adjustments. But the biggest contributor to CPI right now is rent, and rent is not going up anymore. I know I get a lot of comments, people who say my rent went up last year. I know that was last year. Last year, inflation was very high. This year, it is not very high. And owner's equivalent rent and the way they measure that stuff, it lags. It lags significantly. And if you look at what the rental markets are doing, they stopped going up. And in most markets, they're actually starting to come down because people just can't afford it. As the saying goes, the solution to higher prices is higher prices, not subsidies and CHIPS Act and Inflation Reduction Act and EVs and wasting money on unicorns and rainbows. But try telling that to the government. But thank you, Steve Woitis, sir, for the super chat and the support of the channel, sir. And thank you, JJ Watt says, thoughts on when escorts in Vegas will start offering BNPL, asking for a friend. Well, your friend should not be doing that, JJ Watt. Let's tell your friend BNPL for escorts in Vegas. It's a family show, JJ. I'm trying to keep things neat here. Look, buy now, pay later. It's everywhere. There was an article this morning. It didn't make the cut because there's just so much going on in the world. I think buy now, pay later loans are at something up 15% year over year, some ridiculous growth. BNPL is a joke, guys. I mean, it's absolute garbage debt. It's being sold to people's retirements. Check out that video that I did on BN. It says buy now, pay never in the thumbnail. It's ridiculous what they're doing. Anything to keep those retail numbers looking good, anything to keep the ball rolling just a little bit more. Forget the long-term damage we're doing to ourselves. And if you're one of those people that's out there putting Vegas escorts on buy now, pay later, that's unhealthy in so many ways. Seek help. Seek help immediately, please. Thank you, JJ Watt. And thank you, Lisa B., who says, just because, keep up the great work. Well, that is an excellent note to end on, Lisa B. Thank you very much, just because. And thank you for supporting the channel, everybody, and for having your coffee with the Melonheads this morning. It's going to be a busy day. We will be back at 2:25 p.m. Eastern Time today, live streaming the Federal Reserve press conference at the FOMC. So I'll see you guys this afternoon for Jay Powell. What is he going to say? Dove or Hawk? Let me know in the comments. Thank you, everybody, for the super chats. Thank you to my Patreon supporters for everything you guys do for the channel. You guys are awesome. Hi, Mom. Hi, Dad. I love you guys. Till next time, everybody, live small and dream big.